Hello and welcome to Treasury Strategy's second coffee break. So I hope everybody is settled down with their cup of coffee or their tea. Today what we're going to talk about is the new payments world. Does it include banks? My name is Dave Robertson. I'm a partner with Treasury Strategies, and I'm here with my colleague, Marika Pappas Christopher, a principal. And Marika, why don't you start us off and tell us about the disconnect between how we see our bank clients viewing the payments world and the way that we see non-bank solution providers viewing the opportunity in payments.
Thanks, Dave. You know, it's astounding to me the differences that we've seen between the bank and non-bank solution providers and how they view the actual opportunity in the payments business. Banks, on the one hand, are seeing the business as a mature one with some incremental organic growth from the economy and maybe some new client acquisition. Many of the banks that we speak to say maybe 2 to 3% growth per year. And a lot of our clients indicate that they just can't innovate because of regulations and some other constraints. But when we talk to our non-bank solution providers, they see the payments business as one completely different, where they have limitless growth. Many of these startups have grown rapidly, with several of them achieving 10-figure valuations. In our work with the banks looking at their payment strategy, many of them indicate there's just too much regulation to innovate in the payments business, and those darn non-banks just don't have to deal with it. Is that a fair point, Dave?
Well, it's interesting, Marika. We do quite a bit of work with the non-bank payment players, and occasionally they do complain to us about regulation. And we have to have a laugh and say, you know, try being a bank for a week. So it's certainly true that regulation is a constraint. It chews up capital. It requires a lot of careful design in how you deliver solutions, how you interact with your clients. But we find that all too often, regulation is really just an excuse not to innovate. We see many industries, gaming, airlines, pharma, that are also heavily regulated that innovate. And we'd be remiss if we claim that banks do not innovate. There are innovators out there among the banks. If you look at what Barclays has done on the retail side, very innovative things, Capital One in the card space, there is quite a bit of innovation. We just don't see enough of it within banks. And our view is that, yes, regulation is a constraint, but it should not be an excuse not to innovate. So, Marika, if we assume that innovation isn't being killed by regulation, just constrained, what specifically do you see the non-bank players doing that banks could learn from in being more successful in the payment space?
Well, Dave, the non-bank solution providers are looking at the payments industry from a completely different viewpoint. In our work with them, we've seen some key values that banks can certainly strive to adopt in their own payment strategies. And these include accessibility, integration, technology, and the user experience. We've seen some new companies come along like Square and Stripe who are selling their software or hardware for free and giving accessibility to those products online, a very different experience for onboarding and just complete client relationship than the typical bank experience that we've seen. We're also seeing these non-bank solution providers placing much more emphasis on the client experience and having technology drive their solutions. Many banks are just not necessarily equipped today to do this as nimbly as those non-bank solution providers, but it certainly can be and must be done, whether it's through partnering or bringing some sort of that capability in-house. Dave, how are the non-bank solution providers creating analytical value and enhancing the entire payments ecosystem?
That's a great point, Marika, and I think it's interesting to look at some of the things that Amazon has done recently. Amazon responded very strongly to the forays by Square and by Stripe, and they're going after that merchant processing flow as well, and they're doing it at price points that on a payment basis alone really doesn't make money. And so that begs the question, if Amazon is going so aggressively after this, but they're not looking to really charge very much for the payments, what's in it for them? And Amazon, who's a huge player in payments, actually does quite a bit of pure payment solutions. They're really looking at payments as a stream. They want to capture that stream. They see the payment flow as a platform for commerce, for marketing, and for intelligence around consumers. And I think it's interesting because the initial focus when Square launched was, wow, they're going after this really cheap price point, and they're making merchant far more accessible, and they're letting people do it right through a mobile device. All of that was fantastic. But even Square is looking at the payment solution as part of a broader ecosystem. When you get done with your taxi cab ride, for example, there is a very brief survey when you get your email. Did I have a good experience? So as a taxi cab company, I'm now getting almost real-time updates on how well my drivers are doing. We're even seeing Square partner with private equity firms and begin lending against the merchant receipts. So I think there's two things really fascinating about the way our non-bank clients are approaching the payment business. One is they're looking at payments as part of a sort of a platform through which to do a lot of marketing, supply chain, and other intelligent insights. And the second thing that we see is they're really looking from the solution back. All too often, I think we see with our bank clients, they get caught up in their plumbing. How do I take this great settlement capability that I have and how do I extend it? Whereas our non-bank clients tend to say, I want to solve this business problem, and oh, by the way, I do need to kind of settle these payments. I'll get a bank to do that for me. And when you look at the total value being created, going after that end market commercial application, whether it's a level up going after the consumer retail space or Atalia in the supply chain, they're looking at much bigger multiples of value creation than simply processing the payment. So Marika, having kind of painted that scenario, what is sort of the prognosis here? Where are things headed?
Well, I think this picture paints a great picture. The question is whether banks want to be put into the back seat of the payments world and become just a settlement mechanism, and I suppose that is a choice that has to be made. Most would agree that we're in the midst of a very serious disruption in the payments industry, and staying that status quo may be a short-lived option. Now, banks do have some competitive advantages over these non-bank solution providers. They still have the advantage of having a strong connection to their customer base and a wide range of product offerings that some of these solution providers just don't have today. But with the innovation in technology and a lot of retail experiences changing and transforming into the commercial space, I don't think that the non-bank providers can be ignored for much longer. So Dave, what can be done to put banks back in the driver's seat?
Yeah, who wants to sit in the back seat with a bunch of screaming kids? And it's not even like they have like a little DS game to play with to keep them occupied. So bad strategy on the behalf of that parent there. If we look at what banks can do, I think you're right. They can build on their strengths, trust. The distribution reach of banks is just incredible. When you think about how many small businesses they reach, it's just unbelievable. Some banks are approaching or exceeding 1 million small business customers, and small business is one of the spaces that's just exploding. If you look at the angel.co website where angel investing is being done online, it's a great website just to track where the innovation is occurring. And there's probably not a week that goes by that I don't see some small business-focused application being launched looking for angel investing. Banks also have delivery excellence. I don't want to criticize our non-bank solution provider clients too much, but some of them kind of start up with, very nimble solutions, but they don't have that proven resiliency of banking. Now, they may not have all the legacy constraints either, but banks are very good at process excellence and quality. And then risk mitigation. It's a double-edged sword. A lot of times I think we feel as an industry in banking that we can't do things because we're so risk-averse and we need to mitigate risk. But actually, you do have to manage risk, and that's something that banks do well. In our corporate work, we actually see our multinational corporations really trying to adopt the risk excellence and rigor of the banks. Having said that, what we'd like to do is kind of throw out some new behaviors that we think banks should be adopting. And some of you may already be adopting these behaviors, but if you're not, it's something to consider. The first is to focus on the end market needs. That's where the value is being created. That's where the need is being satisfied. And if we look at the scale dynamics, how many banks are really going to be core processors in the payment space? It's just not feasible given the scale that's required. When you focus on the end market need and you're solving a solution and you can propagate that solution, you're creating an incredibly valuable business. One of the things we've done is size the total spend on financial operations by companies, and banks capture about 15% of it. The remainder is internal staff, it's third-party service providers, it's technology solutions. So there's a lot of space out there in the financial arena not being covered by banks. And moreover, I think as you pointed out earlier, Marika, many of these solutions are actually delivering value to the chief marketing officer. We recently did a project for a corporation, a payment strategy, and that was actually driven by the marketing group within the company. They can also focus on customer experience. This has become a very fuzzy word lately, and we hear a lot of banks talking about we're focused on customer experience. But what does that really mean? Is it the customer experience with the bank? Or is it the customer's experience in billing their customer, collecting funds from their customer, having consumers interact with them? So what we're saying here isn't so much focusing on the customer's experience with the bank, which is critical. No doubt that needs to be addressed. But focus on your customer and their customer's customer and their suppliers and that experience. How can you make that richer, better, more integrated? Thirdly, I think there needs to be a culture and a platform to innovate. We've spent the post-crisis years really getting our hands around regulation and addressing some compliance issues. That's never going to end. We are just in a perpetual world of compliance and regulation, but there needs to be a new equilibrium where we structure ourselves so that we can innovate and bring new solutions to market. That may be challenging, but if you can establish that, you're basically left with the mature settlement activities within the payment space. And number 4 is kind of an interesting concept, but part of the challenge we see is that transaction banking payment executives are not being asked to do enough. The board management's coming to them and saying, give me high single digits growth, give me low double digits growth. And the first thought is, boy, that's tough, but maybe I can do it incrementally through pricing and through cross-sell. Well, if I ask you to do that, I'm not asking you to fundamentally change your business, and you're not going to. But if I go to you and I say, I want you to double your business in 3 years, the first thing you're going to do is probably look at me like I'm crazy. But the next thing you're going to do once reality sets in is you're going to think, okay, if I need to grow this business, I need to get new markets, I need to get new solutions, I need to capture a much broader array of value. And I think if you started out your strategy around payments by saying, I want to triple the revenue of my payments business, you're going to come up with very different answers to that question than how do I generate double-digit growth. So I think as an industry, one of our biggest challenges is our brightest executives are being asked to incrementally grow a very exciting space. We're asking the wrong growth goals at the very heart of it.
And I think what's really interesting, Dave, is that many of these non-bank solution providers are in fact interested in partnering with banks to deliver their solution. It's not really a me versus them situation that's going on. They understand the value and delivery channels that the bank can offer that they may not have access to today, and the bank has had these relationships for decades. So it's certainly an opportunity where if the bank does not have a culture of innovation or focusing on technology and end user experience, there's certainly an opportunity to partner with some of these firms that have that as their core competency. Well, Dave, we've talked about a lot during this morning's coffee break. We've talked about how differently the banks and the non-bank solution providers view the payments opportunity. We've talked about how other industries like the airlines have dealt with obstacles like regulation and still come out on the other side with innovative solutions. We've talked about how solution providers can provide a new kind of value and transparency into the payments ecosystem. And we've also talked about how banks can get back into the payments game through trust, innovation, customer experience, and setting some really aggressive goals for their business. So Dave, why don't you close us out by talking a bit about how Treasury Strategies has assisted some other banks in getting into the driver's seat of payments?
Okay, thanks, Marika. And so this is our commercial, so we'll keep this very brief. But if you look at what is critical to succeed in the new payments world, it's really looking at that end client. could be a corporation, could be an insurance company, and it could be a consumer. And that's something right in Treasury Strategy's wheelhouse. We are consulting to the payment, the Treasury, and even the marketing operations within large companies. There's also the knowledge of the bank and the non-bank provider space. This is an incredible market. I think something like maybe 5 years ago, we cataloged all the non-bank players in the payment and liquidity space, and there might have been less than 5,000 companies. We came back and did that recently, and first of all, more than half the companies are gone. They've been acquired, they've been killed off, what have you, but there's been a whole explosion of new providers, and we're not even done cataloging them. It's almost like a little ticker that just keeps moving. There's new ones being created each day. And then I think when you come to a payment strategy, there's really an opportunity to look at not only the market needs, but then what is your infrastructure? And this is an area I just want to talk about briefly. We see many of our clients not really recognizing the scale dynamics in the industry. To set up and launch an online portal to provide integrated data to clients and take in an integrated payment file and parse it and settle it, these things are incredible, and we're seeing banks pursue initiatives in ways that they really don't have the scale to pull off. And here I'm talking mainly about the largest regional banks and the mid-sized regional banks. So we think there needs to be a reality check on the strategy. What is the right architecture to deliver payments, and how can I free up resources to innovate and plug in third-party solutions as well? One thing I'd like to point out is that we see a lot of value in the analytical insights from payments. Marika, that's something we talked a lot about today, using payments to tell customers about their customers' behavior, using payment data to try to understand how can I extend relationship life with my customer. That requires a lot of data mining, and that's something that's long been an expertise of the firm. So just in summary, we think banks need to take a very aggressive and holistic look at their payment business. That's taking a look at their environment, understanding what their opportunities are, and really evaluating their options. Do you want to spend your money upgrading a wire payment platform, going to a real-time payment system, or do you want to carve out some money for some growth options in specific verticals? There needs to be a much wider range of options being considered before you get to the strategy and the roadmap. And I'd say one of the things that's been very interesting is the banks that have made acquisitions of non-bank players. We've gotten involved in that, and we've worked with private equity firms in doing due diligence around some of these purchases. And I think even just confronting those business models and understanding how are they making money, where's the growth, where's the synergy, even if a bank doesn't purchase one of these non-bank players, just getting into that level of detail and looking at the acquisition can be incredibly valuable. So we do want to thank everybody today. If there are deeper questions or conversations you'd like to have with Marika and myself, we'd love to hear from you. If you have a different perspective on this, we'd love to hear that as well. Thank you very much, and we're going to have another coffee break webinar. That's going to be on Thursday, December 18th, same time, same place, and hopefully your coffee is tasty. Thank you. Bye-bye.